Michael Burry is a great tweeter. He is not as good as Donald Trump was, but he's pretty effing good. Interesting. He writes tweets and then sometimes deletes them. I don't know why. Now, I am not very active on Twitter. I'm more active on Instagram. So follow me on Instagram. You want to see lots of cute pictures of my dogs. But Michael Burry is a genius. He is famous from the movie The Big Short, but he was written about in the book. He was a doctor who just studied medicine, thought it was easy, and started to invest. And he did extremely well. I believe the name of his company was like Scion Management or something like that. He was one of the first to invest in the housing bubble and the crash by shorting the bonds that held mortgages inside of them. Because if you saw the movie, he talked about how he would actually look at the credit scores within these bonds and said, wait a second, how is this bond rated A, even though it has garbage subprime borrowers in there? And his comment was that people took diversification, and this is very common. I'm going to talk about this. He didn't like the fact that people thought just because a lot of bonds were in here, it's more diverse. That's like saying ARK Investments is very diverse because it has a lot of companies in it. But there are a lot of companies that are selling for very, very high valuations. That doesn't make it diverse. And the same thing he said about mortgage-backed securities. These mortgage-backed securities, the mortgages that are backing them, are garbage mortgages. They're subprime mortgages. That does not make them a group A rated mortgage just because it has a lot of mortgages in them. So he's a very brilliant man. He thinks very differently. He doesn't care what other people think. Kathy Wood last year said, Michael Burry, he understands value, but he doesn't understand disruption. I'm sure when Michael Burry saw that, he probably laughed and said, oh boy, here we go. So Michael Burry says something that we've talked about in past videos. Fraud is very prevalent during market bubbles, and we're starting to see the cracks. We're starting to see the frauds come through on crypto again. We had frauds that occurred years ago when Bitcoin hit 18, 19, 20,000, and then it went down to 3. We're starting to see that same thing. This is the same thing that happens during bubbles. When I start seeing these kind of failures and you see SPACs, here's his actual tweet. No, we have not hit bottom yet. 100% agree with this. This is absolutely true. He thinks the market should be around 1900 for the S&P. I've been talking, if you look at my past videos when I talk about stock market GDP, 10-year cyclically adjusted PE ratio, and the price to sales ratio, it shows that the S&P has to fall by about 50% more. Watch for failures, then look for the bottom. So when it comes to a bottom, you need to have everybody out. The bottom occurs when every last person who can sell has sold, or any last person who would sell has sold, okay? That occurs when there's massive failures. What massive failures? There will be more of the crypto mess happening. There'll be more. You see the crypto hypesters that have started to crack and started to fail. There will be more to come. When you look at failures in terms of companies starting to report and even go under, or just like the dot-com bubble happened. It probably won't be as prevalent, but there'll still be companies that couldn't get their funding, couldn't generate free cash flow, will start to either go under or really, really have massive drops in valuation. And we've already seen that start from February of 2021 to now. Look at the major stocks, Workhorse, NEO, Peloton, all the hype stocks that we told everybody to avoid have, except for Tesla, and even Tesla is down about 50%, not 50%, maybe it's 40% now from its high, but it still has a lot more to go. 2 SPAC ETFs failing is not near enough. So that's the other thing. When I hear people say, well, yeah, everybody's negative on Bitcoin, you haven't seen negative yet. And by the way, this video is not about me putting fear, uncertainty, and doubt in anybody's mind. I just look at the data out there and I make comments about it. When stocks are a lot lower, you will hear me saying this is great. Start buying. I don't know when it's going to turn around, but eventually it'll turn around. Just like I didn't know when the market would pop and start to go down, and it eventually happened. Value investors are never good at timing. Spoiler alert, no one's good at timing. Anyone who thinks that they can predict exactly when a stock market will crash, if they get it right, it's by luck. Mo last year got something correct by luck. And I said to him, oh, that was luck. And he even acknowledges that's luck. You don't know when things are going to happen. But if you look at valuations and if you look at the long term, you can sit there and say, hey, things feel a little frothy here. Now, I've been saying that for 5 years now. So a lot of people would say, Paul, you're wrong. Great, I'm wrong. I have been wrong. But we'll see how this all plays out. I think the S&P and especially the NASDAQ have a lot lower to go. And when those prices start to come down, you will see me starting to get more optimistic about individual stocks and eventually the point where I say, hey, the market's going to do very, very well if you invest today. Okay, so 2 SPACs, ETFs failing is not near enough. We need to see a massive exodus from SPACs. And if you go look at SPAC activity. And for those who don't know, SPAC is a special purpose acquisition company. And they were very, very popular in the last few years, but they've really slowed down. I think there's some data out there that we can show showing where SPAC activity has been this year versus last year and versus the year before. It's way lower. Now, he talks about crypto crash check, meme crash check, and I don't think the crashes are done here on crypto and meme. SPAC crash, not done yet. Inflation, not done yet. I don't get these parts of his tweets, but the point is, I don't think we're anywhere close to done yet. Nowhere close to done. When I still see that the 18, 19, 20-year-olds are still trying to tell me they don't get it on Tesla, we're not done yet. My good friend Michael Moskal made a great statement to me a while back. He said, when I see people give up on Apple, that's when I know we've hit the bottom. And I added Tesla. He said, yes, exactly, Tesla, because the allegiance to Apple and Tesla is so, so strong. And don't get me wrong, Apple is nowhere near the overvaluation of where Tesla is. But I do believe Tesla is massively overvalued. I do think that we'll see it at some point 80, 90% possibly lower than it is today, at least from a valuation perspective. So what does that mean? The current ratios of 200 to 1 in terms of earnings and free cash flow will drop to 20 to 1. Now, that does mean that the stock could be worth a lot more, because keep in mind, 5-6 years ago, I thought Tesla was overpriced. And now my value on Tesla is higher than it was 5 or 6 years ago because they did a lot better than I expected them to do. Okay, that's fine. But valuations will matter in the long run. And if I were a betting man, which I am, and I do have a bet on Tesla, I have sold calls on Tesla to bet on it falling. It's not a direct short because it's hard to borrow and the interest rate's too high, but I've sold calls on Tesla as a bet to short it over the next 2 years. And I'm fine with that. And I will sit there and see how it goes. But I do believe Michael Burry. He's a brilliant man. He understands value. He understands business. Keep in mind, he was investing in GameStop when it was $4 a share as a value play. He believed it was a value play at $4 a share. He sold it right after the surge happened, but I think he probably got out in the 20 to 30 range. And then it went to 300 or 400 or wherever it ended up going. So I wouldn't bet against Michael Burry. I look at him and say, hey, he's got very good logic. I love his approach to things. But if you guys think that this is anywhere close to done, it ain't done. When's it going to finish? I have no idea. But when I start seeing people talk in the news about how stocks are not the place to be to invest, Apple and Tesla are dead, those kind of things, that's when I'll feel comfortable saying, hey, we're either at or near a bottom. And remember, you're never going to get the bottom exactly right, ever. That's never going to happen. So stop worrying about it. You're never going to buy at the bottom. You're never going to sell at the top. If you like what I'm saying, the goal as a value investor for me is to buy a company when I believe the price is very disconnected from the value. When price is much lower than the long-term value of the company, long-term, I don't get affected by quarter-to-quarter misses or beats. Long-term value, when it's disconnected, I acquire shares. And my goal is that in the long run, stocks are a weighing machine. That as the company builds its balance sheet, increases its cash flow, buys back cheap shares, that my value will eventually end up jumping on the company. If you like this and you want to understand more about margin of safety, you must watch this next video on our margin of safety. Thank you very much, and please don't forget to subscribe to our channel.